Cryptocurrency trading has gained immense popularity in recent years. With the potential for high returns, it has attracted a significant number of investors and traders. However, navigating the world of crypto trading can be challenging, especially for beginners. In this video, we will explore some of the common mistakes made by traders and provide insights on how to avoid them. Whether you are new to crypto trading or have some experience, understanding these pitfalls will help you make more informed decisions and increase your chances of success. But before we begin, please like and subscribe to our YouTube channel for such amazing and informative videos. The importance of research in crypto trading. Before diving into the world of crypto trading, it is crucial to emphasize the importance of thorough research. Many traders make the mistake of relying on hearsay or following the crowd without conducting their own analysis. By thoroughly researching the cryptocurrency you are interested in, you can gain a better understanding of its technology, team, market potential, and risks involved. Neglecting risk management strategies. One of the gravest mistakes a crypto trader can make is neglecting risk management strategies. It is essential to determine your risk tolerance and set stop-loss orders to limit potential losses. Without proper risk management, you expose yourself to significant financial risks and potential emotional stress. Chasing quick profits. Crypto markets are highly volatile, enticing traders to chase quick profits. However, this approach often results in impulsive and ill-considered decisions. Instead, it is crucial to adopt a long-term perspective and prioritize fundamental analysis over short-term price fluctuations. By focusing on the underlying factors that determine a cryptocurrency's value, traders can make more informed and strategic decisions, increasing their chances of long-term success. Taking a patient and fundamental-driven approach is key in navigating the volatile crypto markets. Ignoring fundamental analysis. Fundamental analysis is a critical aspect of evaluating cryptocurrencies, as it involves assessing the intrinsic value of a digital asset by examining various factors. These factors include the underlying technology, the expertise and credibility of the team behind the project, strategic partnerships, and the level of market demand. Neglecting fundamental analysis and relying solely on price charts can lead to significant financial losses. By understanding the fundamentals, traders can identify potentially undervalued or overvalued assets, allowing them to make more informed investment decisions. Incorporating fundamental analysis into your trading strategy enhances your ability to spot lucrative opportunities in the crypto market. Falling for FOMO, fear of missing out. FOMO, the fear of missing out, can have detrimental effects on trading decisions. It often leads traders to make irrational choices driven by hype and speculative trends, without conducting proper evaluation. To avoid such pitfalls, it is crucial to stay rational and make informed decisions based on thorough analysis. By resisting the urge to succumb to FOMO, traders can maintain a disciplined approach, mitigate unnecessary risks, and increase their chances of making sound investment choices in the volatile crypto market. Overtrading and emotional decision-making. Overtrading and emotional decision-making are closely linked. Emotional trading, fueled by fear or greed, often leads to impulsive buying or selling choices. To counteract this, it is essential to establish a well-defined trading strategy and adhere to it consistently. By avoiding impulsive actions driven by emotions, traders can maintain discipline and make rational decisions based on their predetermined plan. This approach helps mitigate the risks associated with overtrading and ensures a more measured and calculated approach to trading in the dynamic world of cryptocurrencies. Not setting realistic expectations. While crypto trading can be highly lucrative, it is essential to set realistic expectations. Many traders enter the market with dreams of overnight riches, only to be disappointed. Understand that trading involves risks, and it takes time to develop skills and experience consistent profits. Lack of security measures. Crypto trading involves the use of digital wallets and exchanges, making security a top priority. Failing to implement adequate security measures can expose you to the risk of hacks and theft. It is crucial to use hardware wallets, strong passwords, two-factor authentication, and stay updated on the latest security practices. Inadequate knowledge of technical analysis. Technical analysis is the practice of analyzing price charts and patterns to forecast future price movements. However, traders often make the mistake of relying solely on technical analysis without recognizing its limitations. To obtain a more comprehensive view of the market, it is essential to combine technical analysis with fundamental analysis. By understanding both approaches, traders can gain valuable insights into the underlying factors driving price movements. This holistic understanding empowers traders to make more informed decisions, incorporating both technical and fundamental perspectives in their trading strategies. Relying solely on tips and rumors. Trusting tips and rumors without conducting your own research can be detrimental to your trading success. It is essential to verify information from reliable sources and make informed decisions based on thorough analysis. Relying solely on tips and rumors can lead to significant losses. Choosing the wrong exchange. Selecting the appropriate cryptocurrency exchange is paramount for achieving success in trading. Certain exchanges may lack robust security measures, offer a limited selection of trading pairs, or impose high fees. Conducting thorough research is crucial to identify and avoid such subpar exchanges. Instead, opt for reputable platforms that align with your specific trading requirements. By choosing a reliable exchange, you can ensure a secure trading environment, access a wide range of trading options, and minimize unnecessary costs, ultimately enhancing your overall trading experience. Disregarding market trends. Neglecting market trends can result in missed opportunities and the risk of entering positions that go against the prevailing market sentiment. To make informed trading decisions, it is crucial to stay updated on current market trends and sentiment. By staying in tune with the market, traders can identify potential opportunities, understand the overall direction of the market, and align their strategies accordingly. Keeping abreast of market trends allows traders to make more informed decisions, increasing the likelihood of success in the dynamic and ever-changing world of crypto trading. Not diversifying your portfolio. Concentrating all your investments in a single cryptocurrency or a few assets can expose you to unnecessary risks. Diversifying your portfolio across different cryptocurrencies and asset classes can help mitigate risk and maximize potential returns. Failure to keep learning and adapting. Crypto markets are constantly evolving, and it is crucial to keep learning and adapting your trading strategies. Failing to stay updated on market trends, technological advancements, and regulatory changes can put you at a disadvantage. Continuously educate yourself to stay ahead in the dynamic crypto trading landscape. Crypto trading offers immense potential for financial gains, but it is not without its challenges. By avoiding common mistakes and adopting a disciplined approach, you can increase your chances of success. Remember to conduct thorough research, manage risks effectively, and stay rational in your decision-making process. Crypto trading requires continuous learning and adaptability to navigate the ever-changing landscape successfully. So, if you're interested in learning more amazing information, make sure to subscribe to our YouTube channel and hit the bell icon to get notified by our new videos. Please like and share the video. Don't forget to comment down your views on this. Thanks for watching till the end.